And I heard that video kind of fading into our show here today. Tackle Trading's halftime report, 11/18/2019. We've got Cody, we've got Matt. We've also got Coach Mark in the background, all here to give you some analysis on what the markets are doing here on a Monday morning. Matty, you're back. How you doing, my friend? And did we lose audio on that?
We lose Matt. He was saying his camera was acting right before he started, but I guess
no. I was changing my audio because I thought Tim was going to do more than like a 2-second pitch for the pro community.
Oh, well, there's a couple things. Number one, I heard the audio skipping.
No, I thought he was just going to do his normal thing, and I was plugging in my different audio because you guys didn't tell me my audio was coming through my laptop until I figured, let's go with it.
Yeah, I thought you were just taking time to contemplate how you were actually doing. And giving
I ever take time before I respond to a question?
Well, I know, but there's always a first.
Yeah,
there's
always a first. There's always a first.
I'm assuming Tim said, Matt, how you doing today?
I did, of course.
Okay. I'm doing good. I'm excited to be here with the crew, and it's been a while for me. I was a little under the weather last week, and then was teaching for Legacy last weekend. So I'm excited to be here with the crew this week.
Yeah, obviously.
Under the weather. When I heard you, I thought you were gonna die. You sounded awful.
Oh, I was dying, literally, physically, emotionally, spiritually. Every aspect of dying last Monday, Tuesday, Wednesday, and Thursday was me dying. Yes.
Mm-hmm.
Now it might have just been for me to not do what I do, Cody, it would take an act of God.
Sure. Yeah. It's tough being sick. I mean, my kids have all been sick. Mark, your kids have been sick. Matt, your daughter's been in and out of doctor's offices here this whole fall. It's kind of going around right now, and it's always brutal. It affects everything that you do. In fact, I have a rule for trading. I don't really trade when I'm sick. I go in and manage my accounts. I don't spend a lot of time day trading or anything like that. If I've got the flu, Matt, it's usually management, moving on,
So the do not trade zone equals when you're inebriated in the futures market at night.
Sure, that's right.
Tired in the Forex market at night, and now when you're sick during the day, right?
I don't know what y'all talking about. I trade great drunk. So,
I doubt that, actually.
Maybe drunk you think so, but sober you probably look at your account and be like,
I don't got any fears. I don't have any worries. I can just look at the chart clear.
When Mark says drunk, he talks about like one sex on the beach once every 4 months or something.
That's all it takes for me, man.
Yeah.
One drink and I'm ready to roll.
Pink fluffy drinks. That's Mark's MO. There's no doubt about it. By the way, if you're watching our show for the first time, welcome out to our YouTube channel. We do this show each and every day at 12:30 Eastern time. Give us a subscribe and a bell click, and make sure you come back and join us each and every day. And if you're hashtag Team Tackle, pop in the chat and say hello. And also remember, give us that thumbs up as we get started. And remember, guys, we always give 15 days of our pro trial for free in the chat. That's a standard offer at Tackle Trading. Come and join us, see what we do on the weekends. Let's get down to markets here a little bit, Matt. Right up here at the top, we're on a doji. We had mixed news over the weekend at best. It's kind of just a continuation. I saw headlines about Trump meeting with Powell and stuff on the trade deal. What's your read on the market just from a technical perspective? We'll get to the earnings, the news, all that other stuff here in just a minute, but what's your read here?
I mean, the market just absolutely euphoric over the last month and a half, Tim, ever since, we started hearing the initial phase one type deal. And it's been just on an absolute rip and roar ever since that time frame. I mean, the market did slow down quite tremendously over the course of the last couple of weeks, as it was just in this fade action, kind of pumping up against that 3,100 level. Mm-hmm. And this market just feels like, from a resistance level, not so much from a support level, but from a resistance level, this market's just stepping stone between 3,000, 3,100, 3,200, 3,300. We'll see where the end is. But I mean, I don't think you can deny the strength of the breakout that we saw over the course of last Friday. So, when you're sitting here and you're looking at this intraday resistance level right there at about that 3,100, and you can see it kind of punch up or against there, punched it against once again there, punched it against there. Then it comes here and it punches up against that as well. And then it breaks out of that 3,100. Once it breaks out of that 3,100 zone, you're going to see that euphoria buy. And there's a lot of news out there that just says, there's a lot of people chasing gain right now. There's a lot of people chasing the trend, and we call it chasing the dragon. I mean, I do think it's overstretched, range up, but you cannot deny the strength of this market right now. It's in full euphoric mode, and we've said that for a couple weeks now. I mean, this was the highest ranking we have given the S&P in our Tackle newsletter, I believe, at least year to date.
In quite some time. There's no doubt about it. In fact, we gave it a 5-yard upgrade to the 15-yard line, Matt. That puts us in the +2 category, closer to the end zone than we've been in a long, long time. Mark, I want to get your take on this. Is this just an institutional FOMO rally where they're just afraid of missing out on the big run? We're heading into the end of the year, and so money is piling in, or is there something fundamentally strong here?
I don't know if there's anything fundamentally strong. Listen, and following the news headlines, like last week, like let's just take Friday's headline. Market up on trade optimism. This morning's headline, even though it was rally, is like down a little bit because of trade worries. Like there seems to be a zigzag on trade going over for a while now, leaning positive, and it just seems there's zero actual fear, and that the headlines are being used as an excuse. I don't know if you could say anything. I think it's just an absence of bad news, an absence of fear, an absence of worry, and that's all it takes. I mean, if you look back historically, you don't need huge fundamental catalysts to drive markets to euphoric highs. That's never been required.
I mean, I get that. I get that for 10% up, but we're talking about a market that's in the 20s this year alone. And, technology, Matt, we're talking about sector strength. We're going to break down the sectors at the end of the show. Tech is up 40% year to date. So we're not just catching a little bit extra run. This is after the biggest bull run we've seen in a long time.
Well, you asked the question, is this based on fundamental strength? And the answer is an unequivocal no, absolutely not. It's, I mean, facts that came out just today, and I mean, we're looking at 92% of S&P 500 companies that have, reported earnings so far, and that pretty much puts us on the back end of earnings, and we're looking forward to, just some typical price action and technical analysis here. But with 92% of companies reporting earnings, we have seen an average decline in revenues by about 2.3% this year, which is this quarter, which is the worst since 16 in 3 years, since the summer of 16. So, and that just furthers on the argument of the slowing growth environment. And, I've seen some positive economic news coming out of Germany and out of the Eurozone, no doubt about that. But this is not on, in my opinion, this is not on the backs of any fundamental strength here. We're still looking at the average Shiller PE ratio in the market over 30, which is the second most overvalued market in the history of mankind. And you're looking at people chasing gains, not chasing valuations right now. And at some point, it's going to turn around and bite them in the ass. But that you could have made that argument during this entire run here, and it's still, euphoric and buy, and the markets can stay euphoric more than longer than you can stay solvent. So, it's like Keith King always says when we're talking about this market and the irrational behavior of this market. And it's like, you got to plug your nose and buy. And that's what he says. And that's what I'm looking at right here. At some point, this is good. The people that are chasing gains and not chasing valuations, I think it's going to bite them in the behind at some point. But is that point today, or is that point a month from now, or 6 months from now? We don't know. I'm still going to be overly cautious here, just in the back of my mind, because, even over the course of the last 3-4 weeks, guys, we've seen cold water poured on that phase one trade deal. We initially saw it with, the discussion that they couldn't find location to do the signing. And now there's reports coming out of China today that China is kind of a little lukewarm on phase one of the trade deal because Trump won't roll back the tariffs. And now there's reports that China is going to take a step back because they're going to wait through the impeachment process. But everybody knows they're going to wait till the election next year. So, this is something that, in my opinion, is going to be ongoing. And I do not believe that the market is pricing in, negative trade wars, because, even intraday in the last 2 weeks, Tim, we've seen intraday negative trade wars where the market's down, intraday 5, 10, 15 points. And every single one of those times the market has bought that dip. every single time the market has bought that dip without any positive news coming out of it. Just this hope that this deal is going to be done, and that this deal is going to be, something that will, help the S&P come out of this negative growth type environment. And I'm just not sure from an economic and a fundamental perspective that it can. From a price action perspective, the price, in my opinion, of the S&P does not reflect what's really happening from a fundamental perspective within U.S. companies' earnings reports, at least not from my, reading of the tea leaves.
Yeah. Well, Goldman Sachs came out today and said that actually next year they think that the market can continue to run another 10, 15%. Analysts are all buying the hopium right now, Matt. And you make a really good point on the intraday chart. If you look at that chart right there, there's not two red candles in a row for 6 weeks, guys. I mean, we haven't seen any weakness that wasn't bought institutionally and right away on the intraday charts, on the 15, on the 60, you name it. We're in a parabolic uptrend. We're riding the lightning here. Now, how far it can continue, we don't know. I mean, we've seen this before. Does it concern you with the pay range, Matt? Because if you look at June to August, it was a similar time and size. And now between October and mid-November here, we have a similar time and size. Is there something about those characteristics that make you think the market could pull back here?
Well, the market's been range up for 3 weeks.
Yeah.
I mean, it really has been range up. And I mean, it gave it a little bit of a reprieve last week, just with the simple consolidation right there between 3,100 and really kind of that 3,070 level. So yeah, it does give me a little concern about the market. Absolutely. But Tim, this market is not being led by every sector out there. And that's another thing that's a little concerning for me. You really, and I know you're going to wait for the sectors at the end, but I'm just going to kind of look at it right now. When you're looking at these sectors right now, you're starting to see some massive separation from a relative strength performance when you're looking and breaking down those sectors. Obviously, we have the S&P 500 ranked right at that 15-yard marker, given the fact that that's a positive 2 type territory, fairly aggressive ranking in the S&P 500. But when you break this down from a sector relationship perspective, Tim, this market's being led by 4 sectors. 2 aggressive and 2 defensive, which are not defensive. They are aggressive, but they are categorized as defensive. The first one here is technology, Tim. Technology is just on an absolute tear, and it's not just in this recent type of movement here. Technology's been on a tear all year long. We're talking about the number 1 sector out there in the marketplace. And obviously this is overextended range up. You might see a little bit of consolidation over the course of the next, few days, given the fact that we don't have a lot of earnings this week. And it's not just earnings this week. We don't have a lot of economic activity this week either, Tim. When you're looking at U.S. economic reports this week, there's not a major economic report until we get on Wednesday, and that's the FOMC meeting minutes, which is usually a boring type economic report. Sure. Outside of that, you don't have anything until you get flash manufacturing coming in on Friday. So we got a lot of European type economic reports this week, but we don't have hardly anything coming in until you get flash manufacturing on Friday. So this should be a technically driven week, maybe a geopolitical driven week. But I like these types of weeks because technically you don't have as many variables as you usually do when you have a very heavy Fed speak week like we had last week, or heavy economics like we've seen in almost every week. So this should be one of those weeks where we just kind of see simple price action really kind of take hold here. So technology is very overextended range up. You're looking at another sector right now that's been just on fire recently, and that's the industrial sector that has a lot of return versus risk parameters when it comes to the U.S. trade war. Looking at this sector here, you got a little bit of a high base, tried to break out on Friday, didn't have the strength, a little bit of a fake out, still in that high base here on industrial. And so you should have some industrial stocks that are setting up in bullish uptrends, maybe retracements, maybe high base type situations, breakouts. That's a sector that I would be looking at this week from a potential breakout perspective. And then you have finance right here. If we look at XLF, finance, very similar to what we're seeing in the industrial sector. real good bullish uptrend, a little bit of consolidation here, a little snapback rally coming back down into 29.5. Call that a flag pattern, but you got that very significant number right there at $30 that I would be, watching like a hawk if I'm looking at financial companies this week. If it breaks out of $30, that $30 can play a significant role in the marketplace. So let's keep an eye on how the financial sector as a whole behaves around that 30-yard marker. And then you have healthcare, which is just absolutely on fire with the breakout on Friday, coming out of this little bit of a flag, cup and handle type situation, break out of that 95.5. And obviously you're chasing a little bit up here at the top, but you got healthcare showing strength here as well. Outside of that, Tim, technology, industrial, finance, and healthcare, the market, it's really kind of just slightly bullish to some degree of neutrality. When you're looking at, the twins with basic materials kind of showing a little bit of strength, high base type scenario, but its twin cousin energy still showing a little bit of weakness, relative weakness, broke out of this trend line, tried to establish something up here. Now it's coming back down to test those moving averages, test those trend lines out. So keep an eye on that. There might be some opportunity, but I don't like what I'm seeing in the energy sector as a whole here, just from a today's perspective. But let's keep an eye on how that behaves around that trend line we have over the course of the entire week. Your other two aggressive sectors here, Tim, are the communication sector. Now, the communication sector, this is a sector that everybody watches, whether they know it or not. Everybody watches this sector. This is your internet providers. This is your telecom type companies. This is your social media companies. This is your entertainment companies. This is your brand companies that everybody knows, right? Your Facebooks, your Twitters, your Googles, your, those types of companies. And you're looking at something fairly interesting here. When you have this price appreciation, it's been pulled back relatively weak against the broad marketplace. But what I'm seeing here, and it kind of reminds me a little bit of healthcare last week, you see a little bit of a breakout here late Friday, consolidate, but keep an eye on how this performs right there at about 52. If we can break back up above 52 on communication, a lot of those stocks in that sector can absolutely fly. So keep an eye on the communication sector this week, especially if we get a confirmed breakout above that 52 handle. And then you have consumer discretionary here, which is, chock full of all your retail sectors. But that is, outside of like everything, industrial running, finance running, healthcare running, industrial, all of these companies, these aren't Santa Claus rally companies, Tim. I know we're like looking at the market right here. And we're like, oh, we're getting the standard Santa Claus rally, but we're not getting it in the stocks that are prone to the Santa Claus rally. Sure. Caterpillar's not prone. John Deere's not prone. It's not like, people are going out and buying a John Deere tractor for their, kid for Christmas.
Dude,
right?
That would be the greatest Christmas ever. What are you talking about? Now I want a tractor.
I was just thinking, I was like, I want a tractor for Christmas.
I absolutely would love to get a new tractor.
Like those
riding lawnmower.
They lead someone out front and there's like a big bow on it, like a big red bow on a John Deere tractor. Oh, I'd be so happy.
I'll let you two geek out on that for a second. Are you done?
Well, I will say this about the XLY, and yes, I am done on the tractor thing, but Home Depot earnings this week. So that one could actually be a mover from that sector perspective. And Amazon, that big Black Friday stuff, we saw Alibaba coming out. Amazon's 22% of that sector. It's stuck in the mud. I would not touch that one. There's so many good sectors, Matt, that you would just identify.
Yeah, and I'm with you on that, but it's my whole point is that for months and months and months, the market, we were saying this was a stock picker's market because almost every sector was doing the exact same thing. Go look at the past tackle newsletters. We had so many times about 9 of the 11 sectors ranked within 5 to 10 points of one another. And now you're starting to see true separation from a strength versus a relative weakness perspective in the marketplace with some of these, 2 defensive sectors and 2 aggressive sectors out there. Looking at your defensive sectors, defensive sectors very quickly. I'm going to just take a look at XLRE and XLU here. I'm getting a little concerned about these 2 sectors, especially with the relative, risk on type environment. You're seeing a breakdown with the bullish, with the bearish retracement coming here on the real estate sector, obviously showing some strength here today, but now you're coming into some pretty significant resistance zones. I'm a little concerned about this sector unless we start to see some true volatility come back into the marketplace. And the exact same thing can be said about the utility sector.
Mm-hmm.
Looking at this very, very quickly, you're looking at a breakdown here, very similar to what we're seeing in real estate, coming back up into these, resistance channels at $63 and $64. So it's going to be interesting to see how these two sectors perform if the market does maintain its current bullish strength. And then the last sector, consumer staples, and this is the sector, and I obviously left it for the last for a reason. This sector, up until the past 2.5 months, Tim, this sector has been one of those sectors that have just been consolidating. It's been held back a little bit. It's not shown the volatility and the breaking of support that XLRE and XLV and XLU have done, the utility and the real estate sector. And this sector was one of the leaders. I want to remind everybody about this sector the first of the year. This sector was just the most consistent sector. This sector was just every dip. We bought this sector. We had so many stocks on every stock report, every options report, as this sector was the #1 sector, the most consistent sector for the first 6, 7, 8 months of the year. And then it consolidated from September, October, coming into November here. And now you're seeing a potential breakout here at about 91.70 by 91.80. So this is something that I would keep a fairly close eye on. Obviously, the intraday analysis, we're seeing a breakout of those channels, fading up towards the midday price action in the marketplace. Maybe we come back down and we test that 61.60 breakout from the intraday perspective. But this is a sector that I would personally keep an eye on. Communications with a potential breakout of 62, staples with the potential breakout here. You might see, and again, nobody knows what the future holds, but you might see a little bit of profit taking in those 4 sectors that have just done tremendously well over the course of the last month and a half. And you might see some money come back into the communication, coming back into consumer staples.
I think it's really amazing analysis there as well, because here's the thing, those communications and staples, they're back on the 30, 40 yard line in the newsletter. So the question always comes in on the weekend, Matt, which ones can make that big leap forward? And where do you take a little profit on? I do think tech, industrials, and healthcare, they're definitely overstretched. There's no doubt about it. And there is a lot of opportunity to pick spaces in the market. The one I keep scratching my head on, and I need to get Mark's analysis on this one, is XLRE. Because the chart on that one, Matt, is not good. Obviously, that's a bearish retracement into moving averages, right? I mean, that's not a good chart by any stretch on the swing trade. But I think it comes back to interest rates. And do we believe the Fed? Last week, the Fed was talking in some testimony that they're not going to lower interest rates next year. I don't believe that, at least until the back half of the year is what Powell was talking about. But then Trump and Powell were meeting today.
Hold on, very quickly. Do they need to lower interest rates if they're going to artificially do it through quantitative easing?
That may be where their argument is, right?
And they don't need to say that because people don't, because it's non-QE and it's non-repo and it's they don't want to admit what they're doing is very similar to what they did back in 2008, 2009, and all the way through to 2015. They don't want to admit that because I think that makes Jay Powell cry at night. But at the end of the don't act like Jay Powell probably doesn't cry in his beer at night.
I just got the image of him like fetal position with like a body pillow.
First of all, he doesn't seem like the type to cry.
Here's another image for you. Him and Trump met today to talk all things monetary policy, economic policy, fiscal policy, negative interest rates, all that jazz. And when I read the report, and I was telling you guys this earlier today, when I read the report that they were meeting and having those discussions, it just reminded me of that scene in Too Big to Fail, where Paulson and Bernanke are eating some oatmeal and they're staring at each other's eyes in this long, loving embrace. And they're just like, what are we going to do? Right. These are the things we are forced to do. Right. It's just, it's a funny, it's really it's not meant to be a humorous scene, but it is the funniest scene in that entire movie, in my opinion. And that's what I thought about here this morning. But, like I said, Tim, I mean, there's a lot of things the Fed can do to adjust interest rates without actually changing the Fed fund rate. And so maybe, like last time they went to zero interest rate environment. And then when that didn't solve the riddle of price depreciation, they then started quantitative easing to push the rate even to the further negative territory. So maybe they're just reversing the course here where they're doing quantitative easing, repo actions, and it still allows them to have, 7, 8 cuts. Well, not 8 cuts now, but to about 6 cuts coming back down into zeros. So, they could just be reversing the policy. Powell might be telling the truth, and he's just going to handle it through repo and quantitative easing actions. If that's the case, Powell, you're a coward.
Yeah, I'm probably going to stay neutral on the REITs and the utilities in the short term until I get more clarity out of that, Matt. I mean, I know these charts are ugly, but so much of it is sensitive to the interest rates. There's just better. I always say this, take the low hanging fruit. That breakout on staples is an easier play than almost any other sector we looked at, right? So there's a lot of strength. There's a lot of weakness. There's different things happening across these sectors, but I'm going to take the easy trades. I mean, that's just my mindset.
No, I of course you. I mean, I remember one time I was in a class and I was analyzing some stock, and it was in a really consistent, great uptrend, just higher highs, higher lows, textbook master trader type stuff. And this gentleman says, "Matt, this is fantastic, but you're just showing us the good ones." And I said, "You go trade the bad ones. We'll trade the good ones. We'll see."
Hey, you don't have to trade everything.
There's 6,000 stocks out there. You don't got to go force your will on the marketplace. That's not exactly how it works. I do want to teach just very quickly, when you're drawing trend lines here and you have this very consistent trend line, what happens a lot of times once that trend line is violated, as we saw right here with those big red candles, a lot of times it's going to come test that trend line. And this is a very consistent trend line. It's going to come test that. That's right where those moving averages are. I'm with you. I mean, we're going to keep real estate. We're going to keep utilities on the watch list because they're if we do start to see that market volatility, all things technical analysis gets thrown out the windows, and utilities and real estate will go up in that environment. So It's going to be interesting to see how real estate and utilities handles this risk on environment.
Awesome. Dow, Russell, NASDAQ, S&P. The only one that really stands out as different, Matt, is the Russell 2000. Give me a quick peek at all of those. But really, give me your analysis on the Russell. I want to hear your take on this. It's failing to break out again. It's been neutral all year. We know that cash flow condors are a great way to play it no matter what. Does this give you some concern about this sector or this space or these small caps when it just hasn't broken out and it has not followed the market rally, Matt?
When was the last time I said, and I'm serious here, I'm dead serious. When was the last time I said, let's buy into the small to mid cap index instead of the blue chips?
I can't remember the last time. It would have had to have been.
It was not this year.
2017, maybe.
It was not this year. I can't remember exactly when, but it was most likely
17, end of 16, 17. It had a huge run then.
Might have been 17.
Yeah.
I mean, how many times I said, guys, we're going to buy into strength here. We're going to buy into strength. We're going to buy into the leadership, and that's what we've seen across the board. And speaking about some of those leaderships, I mean, you got Apple Computer here, obviously a juggernaut, in and of itself, just absolutely just tearing things, apart. And this is not a trading environment, by the way. This isn't the active traders coming in and buying. This is people. There's no technicals here. It's just buy. I mean, that's real good leadership. When you look at, Microsoft here, that's real good leadership. When you look at some of these leaders in the market, they've been doing really, really, really good. And if you're looking at, saying, okay, Microsoft range up, which I believe you potentially have a new trigger above 150 on Microsoft. Not today. I'd like to see some consolidation here first, kind of like we saw, over the last couple of weeks before we saw that breakout on Microsoft. And I hope all the tackle traders nailed that breakout on Microsoft. It was a really, really clean breakout there. But, in terms of this, if you're looking to pick up something that's maybe a little undervalued that could really kind of run, Netflix right here is showing some reversal characteristics, inverted head and shoulders type characteristics, and you're looking at a potential trigger above that $300 level. You got that hair tick above 309 right there on its earnings report. But to me, that breakout of 300 on Netflix, that to me is tradable. When you look at Facebook here, Facebook here consolidating, hasn't approached its all-time highs right now. But when you got perhaps something above $200, I would say it's, and I could see like a Noah Davidson, who's a fairly aggressive trigger type trader, saying, I want to take this above, 196. Maybe the conservative trader says, let me wait till above 200. That's something to keep an eye on as well.
Yeah, there are some companies that are definitely on my radar. Some of these ones you're talking about feel like there's opportunity above that Microsoft. I do like that trigger. And Netflix was on our option report this week, Matt. So if you were prepared, if you're a pro member and you went through those reports over the weekend, you actually could have caught that move today. And there was some news on Netflix, actually. They were talking about, and they don't know who it is, either it's Icon or Ackman, but some big whale that is buying up shares in Netflix to try to shake up management,
Please
take it into new leadership.
And not Ackman. That's all I'm going to say.
Yeah.
I'm going to say, give me a Carl Icon over an Ackman any day of the week. Any day of the week.
Yeah.
However, I just want to give a shout out very quickly. Go Coach Frank. For those of you who have missed Frank on the market recap, and obviously Friday Frank Day and all that jazz. But just today, Tim, I was looking at the Tackles Twitter account. Here's HLT Hilton. He's like, watch it above 100. Here's Costco. Look at that potential breakout right now.
Costco
Look
was
at that.
during the Friday scouting report meeting. The only reason Costco didn't make the report was risk to reward. That thing right there is a beautiful.
Well, and that was
he was like won't be on a report. He's like, but it'll be on Twitter tomorrow. I was like,
well,
right.
Yeah, that's Frank's way of saying it should be on a report. He's not the guy that's gonna go fight there. If it gets vetoed, he gets vetoed. But you're looking at a pretty textbook cup handle failed breakout test one time. That is called an ascending triangle type technical pattern. And I'm going to add the RSI real quick to kind of show you one thing that we kind of look at when we're looking at the potential breakout here. You got RSI right here with a positive slope coming into the ascending triangle. You got increasing support levels on your RSI, and you're looking at a potential breakout right there. You got room to run on Costco on that breakout, and obviously Costco can run fairly aggressively. Look at the trend before we saw the consolidation. I think that should be on a watch list. LRCX, coming into the potential breakout right here, little flag based pattern, gap up, breakout of that 280. And on this one, one of the reasons why I kind of like this one here is you're seeing a little bit of a breakout here. It retested on the intraday. And then if I could just come in here real tight there, you got another clean trigger there on LRCX. So, and then one last one here I saw Coach Frank put on Twitter here, IVR. If you're looking for some type of retracement, this is more of a REIT more than anything else, but, a nice little snapback, retracement coming into the breakout channel, big red candle coming into support with some heat, slowing momentum, doji based Morningstar candle, upward movement price. That's pretty textbook bullish retracement as well. So if you guys aren't following, Coach Frank over there on the Tackle Trading Twitter account, you're missing out on some really good chart patterns.
And it's really hard not to find him at Tackle Trading, and you can get all those tweets. Make sure that you do go and follow that Twitter account. I agree with you. And he is Breakout Frank for a reason. I know that he does have the occasional retracements, but most of those, Matt, you just brought up, there were a lot of really beautiful breakouts. Costco has to go on a long-term watch list, if not a short-term watch list. Keep an eye on that one, guys. Let's break down the currencies and the commodities here real quick. Give me the US dollar. Now, the chatter here, obviously, today is about trade war, but that's been the chatter for 18 months. As well as, kind of some stuff out of the UK. I noticed that Boris Johnson, there's some political polls came out and said he has more support than we thought. The pound rallied, the dollar's down here today. Matt, we're pretty neutral on the dollar from a ranking perspective. What are you seeing in the chart here?
I've seen, like I said, I think I was on one day last week, Tim, and I said I'm seeing mixed trend analysis. Right.
Mm-hmm.
I saw the W pattern, the breakout of 98, but then you're in the middle of the range, you're hitting into resistance levels. And, it makes it for a very tough environment. It would have been a very easy environment if the dollar would have broke out at 97. I mean, we would have had a price target down around 96 and a half, 96. So, but where we're looking at with the dollar right now, you do have a mixture of trend analysis, both from a daily chart, a weekly chart, and an intraday chart now. So for me, it's kind of like when the market is in neutrality, it's a stock picker's market. And in the currency market, when the dollar's neutral, it's a currency picker's market. There's no doubt about it. And it does make it for a tougher currency trading environment. And so, for a lot of currency traders, they like to have the ability to go trade other instruments, because when the dollar's not setting up, they have the ability to go trade something else. And that's just intermarket analysis 101.
Cody, you're my Forex kid. You do the Forex reports over on the weekend at Tackle Trading. What pairs are you focused on right now?
The main pairs that I'm focused on right now are the euro dollar, which is always what I'm typically looking at. And that's because it is the most traded, the most liquid currency pair in the market. It's also 52%, I believe, of the US dollar index. So when you see the US dollar doing something, the euro dollar cross pair is the easiest one to trade against the dollar or with the dollar, depending on how you're looking at it. After that, I am following the British pound because of some of the news coming out there, but news-based trades can be a little difficult. If you're new to Forex trading, I want you to practice, the go to bed trade, the K trade, that stuff first before you try to do a news-based trade or paper trade anything to learn that way. So those are the two main cross pairs I'm watching.
Matt, that's a beautiful potential breakout. With all the risk of the news, do you stay away from the pound as a swing trading vehicle here, or do you play the breakout?
I don't think so. I mean, at this point, does anybody care about Brexit or Boris Johnson or the UK?
I'm not even sure the
I'm
citizens.
not saying. I honestly listen. I love my friends from the UK. We have a lot of people from London that we love and that we cherish, and we respect their opinions. But around the world, does anybody care about what's going on in the UK? I mean,
well, obviously they don't, because the trigger was actually today's low. Because if you played that flag, not a breakout.
What's the longest term option? A 39-month option? We've now dealt with Brexit longer than the longest term option. So I don't
People could have
think
sold that far out, just sold, hey, this is gonna be figured out, and they would have won.
Yeah, they would have won it. They would have won it. But
3.5 years. Yeah.
I think you can trust the technicals here. Obviously this was a lot of the UK, Boris getting defeated from the Brexit perspective. You're seeing consolidation here. That trigger above 130 is important.
I think it's significant. Definitely a new trigger for me, a new entry point. Yeah.
It would be. It's a technical new entry point. If you'll see it over here, and if I pulled up even longer charts here, guys, you would see how important that $1.30 mark is to the British pound US dollar. But you got a lot of consolidation right here at $1.30. You're punching up against that right there at $1.30. Breaking this down on the weekly chart, you see the consolidation. You see the $1.30. You see the $1.30. You see the $1.30. You see that $1.30 mark over here. You see the importance of it. A breakout of $1.30 should see about a 300 in my opinion, about a 300 pip of price appreciation before you start getting into any major resistance.
Commodities.
Matt, jump over to, before we finish commodities, jump over to the GBP CAD.
Pound CAD cross pair.
Pound CAD cross pair. You're gonna like this chart.
That's a coming down and breakout.
That's already broken.
Yeah, that's coming down and breakout.
Strength out of the pound here.
So there for our Canadian traders that are learning Forex, that's a breakout right there.
Yeah, for a new trader though, don't you prefer the pound dollar cross pair? I mean, I know that there's more complexity in that, but just the liquidity.
You always trade the majors. I mean, that's just yes. Boilerplate disclaimer type, stuff. Obviously, most currency traders are going to trade the euro dollar, the dollar yen, and the pound dollar cross pair. Those three are by far the most heavily traded three currency pairs. But when those currency pairs are not setting up, sometimes you can go look at the cross pairs like the pound CAD and get a nice little trigger.
And Paul has a real good point here in the chat. And welcome out, everybody. If you're just now joining our show, make sure you give me a quick thumbs up on those likes underneath. But Paul says entire semiconductor group seems to be strong. We'll get to some of those stocks here in a minute. I agree with that, Paul. AMD, Matt, we were talking about the AMD chart and Micron, AMD, AMAT, Taiwan Semi. Take your pick out of that space. The SOX index is one of the strongest in the market.
It is, and it's setting up in a high base potential breakout here as well. So here's AMD, not AMS. Here's AMD. Okay, just obviously AMD is one of my favorites. It's you know, it is my favorite semiconductor stock. Okay. So everybody's got to vote for one. You just got to pick one. All right. And I'm not talking trading here. Okay. I'm talking investing here. All right. Here's AMD. Here's Micron. I think I win the argument between AMD and Micron. Did I just win that argument between me and Mark?
Well, I'm not sure Mark would argue for Micron or not. Mark, would you still take
No,
Micron over AMD?
I'm not talking technicals. I'm talking fundamentals.
Yeah.
Um,
AMD stronger.
Here's Intel. You know, Intel's approaching that really, really important breakout channel right there at about 5960. Intel's something to keep an eye on. Here's Taiwan Semiconductor. Okay, which is by the way, the leader in 5G technology. Taiwan Semiconductor is. So you have Micron, AMD, Intel, Taiwan Semiconductor, and let's not bury. There's the Tackle 25 Applied Materials right there, guys. This is a Tackle 25 stock. And if you want to talk about consistency year to date, look at that consistent channel year to date. Had a blowout earnings here, beat on the expectation. You broke out of that. That's a breakaway gap. Now you're starting to run again. So you got to pick one. Taiwan, Micron, AMD, Intel, Applied Materials. Tim, what do you say?
Personally,
everybody's got to pick one.
I'm taking AMAT. It's on the Tackle 25 for a reason, Matt. You know, when we do that, and we're going to be doing a lot of work over the holidays for the 2020 edition of the Tackle 25 that we release in January.
Applied Material will continue its dominance on the Tackle 25.
It's going to be there,
right? Yeah. Now it's fourth year. So,
but if somebody said AMD over AMAT, I would not argue with them. You know,
here's what I love about Applied Materials. Look at the earnings per share here. 87 cents, $1.12, $1.54, $3.17, $4.31. We put this stock on the Tackle 25 in 2016, I believe. And if you look at 2012, 2013, you just see the expansion of earnings per share. And you got to absolutely love that when you're seeing that. And despite the fact that they're expanding earnings per shares, despite the fact that their trend is so strong and their price appreciation has been so strong, they're still only rocking an 18 PE ratio.
Yeah, I know, isn't that amazing?
You're not chasing there. You're basically saying their price is going up because their revenues are shocking. Revenue matters. Yeah. Revenue matters, right? So in terms of Applied Materials, and then you got, looking at AMD here, a company I love, but there's a reason it's volatile, guys. There's a reason AMD can fly from, 20 to 35 and go from 40 down to 18 is because their fundamentals are not nearly as good as, say, an Applied Materials. You can look at Micron here. Micron has the same type of problem that AMD has. Every now and then, you're going to put up a stinker in some of these high flying type growth stocks. Intel here, the blue chip Intel, right? You're seeing very consistent here. You're starting to see growth in 17 and 18, but I wouldn't say that the earnings per share, increases that Intel has had is even remotely as positive or impressive as that of Applied Materials. So when I'm looking at these solely from a charting perspective, yeah, I love what I'm looking at on AMD. There's no doubt about it. But when I look at Applied Materials, I just think this company doesn't have the brand awareness that an AMD or an Intel has, but it doesn't mean it's a worse company. The two best companies in this space, in my opinion, are Applied Materials and Taiwan Semiconductor.
Yeah, that TSM with the 5G, that's a big one.
Those are the two. So if I'm looking at parking one of those chip manufacturers, and I do believe most people need a chip manufacturer in the portfolio. It starts with the Applied Materials, and it's a very close follow-up with Taiwan Semiconductor for me.
Some of the better performing stocks year to date have been these semiconductor stocks. In fact, AMAT, Matt, is up 89% YTD since January 1.
Hold on. Tackle 25 stock, Applied Materials. And I'm excited to look at that Tackle 25, Tim. I'm not sure that we're going to have that many stocks to remove. I mean, Altria is going to get removed. There's no doubt about that. They have a lot of risk to Joel. But outside of that, Tim, I haven't seen a tremendous amount of weakness across the board there. That Tackle 25 has been a juggernaut year to date.
Well, you know, it's a great watch list for covered calls. There's a reason why we spend, the better part of December building that list, Matt, for the whole year, because then we come back and the liquidity behind it, the assumed ability to trade covered calls because of that liquidity makes it a fantastic list to
Well,
keep
it's not
coming
even
back
just
to.
that. It's not even just that. Obviously, liquidity and covered calls and making sure it meets the rules of our Tackle 25 covered call system. That's one thing. But the amount of fundamental data and research we put into that to ensure that those stocks are not the stocks that, people chase the dragon with. People just chase yield and can get a high ROI on the covered call. I mean, that's where the true beauty of the Tackle 25 comes in, is making sure that it does meet the parameters of the fundamental data that we look at.
Still got to look at oil and gold and some of the commodity space. Give me oil real quick. Now, just kind of as a side note to analysis on oil, Aramco's IPO seems to be going poorly, Matt. I read some nasty headlines today about that.
Hold on. Wait a second. Hold on. So you're telling me that an IPO in 2019 has been mishandled?
It's mishandled. There's no doubt about it.
Wait. Hold on. So you're telling me that the Wall Street institutions mishandled an IPO in 2019?
Wait,
hold on. Wait a second. Hold on.
Is Adam here?
Hold on.
Adam, we need a meme of this.
Wait a sec. So you're telling me once again that an IPO in 2019 was overvalued?
Overvalued. They can't come to pricing.
Wait a sec. You're telling me. So one of these, the biggest IPO in the world that we've been hearing about for years and years and now, with a higher than a $2 trillion valuation, and they were going to pump in about $100 billion worth of shares, that they're not going to do that now? That they're not coming in at $2 trillion and they're not going to have 100 billion. Wait. So you're telling me that they're going to come in at 25% what the expectation was, and they're going to come in between 1.6 and 1.7, which, by the way, hey, banks, hey, JP, hey, Bank of America, Goldman, hey, you geniuses over there trying to run valuations. It's not even a $1.5 trillion company. Get the hell out of here with that nonsense. Oh, wait. You're telling me that they're not even going to allow Americans, Japanese, or Canadians, but they're only going to try to get local Saudi Arabian investment coming into Saudi Aramco? Oh, yeah. I am so excited for this IPO.
Well, you and the rest of the world is kind of obviously seeing this the same way, because just nothing but negative headlines that I read, Matt. They're messing up on what the valuation they think is going to be, obviously how much they think they can get out of it. Wall Street has just completely fumbled this.
All right, Matt, I
awful.
went straight to the generator. Check the link in the chat. It exists now.
All right. Oh, meme generator. What a fun deal.
I'm going to tweet this out. I'm going to tweet out my
Yeah, kick that out on Twitter. Do you think does this have any impact? Does this have any impact on the price of oil? Crude oil has it's $2 trillion commodity. Obviously, this is the biggest oil producer in the world.
Can I make up an answer and say yes or no, and maybe perhaps hypothetically, who cares?
I don't think it's really tied to it. In the short term, oil has been neutral. I'm still cash flowing. The question I've had for almost anybody that will listen to me is, do you add the bear call spread to the bull put if you're already on that side of it, Matt? Are you in a pure neutral position here on crude oil, or do you see more risk on one side of that chart?
You're at 58. The resistance zone between 58 and 60 is kind of where I've been looking at that. You got support at 50 to 52. You're currently at 56 to 87. I mean, you're somewhere in the middle of the range. You still got short-term bullish action here with the increasing support levels and a high base right there between 50, really kind of that 56.5 by 58 level. I could see somebody triggering above 58 with the expectation to get into 60 in the futures market. But outside of that, no, I mean, throw a dart. I mean, anybody who says they know exactly where oil's going from this point on, they're guessing. I mean, honestly, I would love to give you a more detailed, amazing technical response than that, but oil's in a range bound. It's been in a range bound for months and months and months now, and until it breaks out of that range, there's nothing to see here, in my opinion. Cash flow is the name of the day.
And Mark, I know that you've been doing some work in the background there. I don't know if you're still here, but I'm going to bring you in if you are. Mark did an incredible commodity report over the weekend, Matt, and did about an hour video for our pro members over there at Tackle Trading. And Mark, you've been nailing oil analysis on this show and in the commodity report for quite some time. Still neutral here, Mark? Is that?
Basically this year, if you wanted me to tell you the fundamentals of Micron, I have zero idea right now. AMD, zero idea. I mean, I've been putting all of my time, energy into commodities, those markets entirely. So, there's a lesson there too. Like, investing is a huge universe. You can't do it all. And finding something you really like, some people love Apple. I don't care about Apple, but for those people that love Apple, they can get really good at trading that stock. You don't have to trade everything. I love the comment you made earlier in the show. I don't remember who made it. Where you're like, there's 6,000 stocks. You don't have to trade them all.
Mm-hmm.
I think it was Matt.
Mm-hmm. No, we're going to trade the good ones. You trade the bad ones. I think
you trade the bad ones. I enjoyed it. I chuckled in the background at that one because it's so true. It's so true.
Mm-hmm.
Oil has dynamics that continue to play out, but that are fairly neutral. But the one thing about oil that keeps fascinating me, U.S. production is going down from a rig count standpoint and has been for months now. If you get a break now, it's likely to the upside. And that I would have not guessed 2 months ago. But, things change. That rig count number has been going down week after week after week. U.S. is pulling back on production. Now, that will change 9 months, 12 months. It's an ever-evolving cycle. But in the short term, things are tilting a little bit bullish right now, as opposed to the neutral where I've been for a while. Now, Trump could tweet about the trade war tomorrow and everything change, but that's where I'm at today.
Another commodity I've been watching a lot closer, Matt, we've been analyzing it every day, is natural gas. And natural gas, I've loved the opportunities here in the last few months. I like the pullback here. I just full disclosure, I have bull puts, on natural gas. I've not added the bear call. I've got some volatility back and forth. What are you seeing in this chart here?
It's warm outside.
Yeah. And that prices have been coming down. Was it cold in Chicago over the weekend, by the way?
I was expecting it to be colder, to be honest with you. Like all the reports, record chill, all that. It wasn't that bad. But then again, I've been in Chicago in, January, like every year for the last 6 years. So perspective.
If you love the weather, because Matt made that thing, it's warm outside. There's some dead seriousness to the price of natural gas and weather. Like there is a direct correlation. So, if you love following the weather, then guess what? We got a commodity for you because weather and natural gas go hand in hand. If you have an unseasonably warm winter, natural gas is going to fall in price. If you have an unseasonably cold winter, natural gas is going to rise.
Well, right now, the prediction is supposed to be one of the coldest winters in something like 30 years.
Cody, you're an old man. You love talking about the weather. You should be a natural gas.
Cody, do you watch the Weather Channel, Cody?
I do check the weather.
Yeah, of course.
I do.
I don't think it was as cold as expected, though.
No. Which actually, Matt, I got to poke fun at you a little bit because what was it last week? And I know you have a fear of flying. It was flying into Chicago that plane skidded off the runway. Were you worried?
How is that making fun of him?
That's abusive behavior, Cody Mackey. That is abusive
I am poking fun.
But first of all, I did not even know that happened, number one, until I was at the event on Saturday. And I'm like, hey, guys, I got to get to the airport. What time do you think I need to go here? And I had a small class and we were just kind of talking about it. And I'm like, yeah, I got this fear of flying. And he's like, and somebody in the room's like, oh man, that plane went off the runway there this past week. I'm like, thank you.
No, it was in Chicago during that cold storm someone was actually videoing the landing as it happens. There's a video on there of them catching the wing going like into the dirt as the
Hey,
split off
hey,
from
Cody, we could all list our phobias and fears, and you can make fun of us one at a time if you'd like to do that.
Yeah.
You know,
it. All right,
Cool.
Mark, what's your phobia? Let's
I'm
do this.
afraid of flying too. I'm right there with Matt.
Mark's phobia is that if Saudi Arabia doesn't have his back on crude oil, he's
Listen, there is no
some-
phobia there. There is deep belief, faith in my. Listen, I believe those Saudi princes like living lavish lifestyles. That is my
Sure.
belief, and they'll always do what they have to stabilize oil prices.
Couple more here. We're going to rapid fire through it. It's been a fun show, but we are up against the end of it here in just a few minutes. Metals, Matt, quick look at gold, silver, any of those metals that are grabbing your eye. From a metals perspective, obviously, you've got a little bearish retracement here, but you're also kind of casually neutral from a longer term perspective. Would you short gold for any reason if it broke down? I mean, do you see that there's an entry there? Would you play that?
How many times have you asked me that in this show? And I'm like, what? My answer is literally the exact same. Eric, do you not remember asking me this question many times?
I
And
do.
what's my response? What are we doing?
And
What are
Noah
you
always says maybe.
No, of course
But
I'm
you know what? You know what, Matt?
No,
that
no.
that
I
that
no.
handful
I
of
dare
New
Noah to
Year's-
tell me the last time he shorted gold. I would like Coach Noah to tell me the last time he had a short position on gold. No, not when I can go out there and short Yum Brands. Not when I can go out there and short Uber. No, I'm not.
Yeah, me neither. I still like gold. I'm still holding gold. Nothing has changed with gold. It's kind of casually fading here. Obviously, if you did,
Literally, I created a system called personal gold.
yep.
No,
I'm with
I
you.
wouldn't short it.
I still like it here. I don't know if I'm adding to any positions because I already have some
not yet.
holdings, but I am still cash flowing on it. There's no doubt about it. Commodities have been the world of cash flow lately. I mean, they've been a great area to do some cash flow strategies in, and that has not changed here in the short term. Many stocks, Matt, that have grabbed my attention. Spotify had some news over the weekend. We cut like a third of the workforce. They're probably going to go bankrupt. And we've got some earnings this week as well. Spot here, it was disappointing. Okay, the gap down here because I was bullish on that pullback pivot confirmation, and I like the company. They had TikTok. I don't know if you've ever used TikTok, but it's huge, obviously.
I'm not 13.
TikTok came out and said that they're going to
TikTok
maybe
is
launch a streaming
rapidly
service.
growing.
It's a
They're
huge company.
rapidly growing.
Yeah, I still like Spotify, but that threw the chart off,
I'm
obviously.
not a teenager.
Yeah. You know who is a huge TikTok is Gino. Gino knows all about TikTok because his daughter is a teenager, and it's like the hottest thing on the planet from that perspective. And then probably the one stock maybe we need to peek at before we wrap here, and then any ones you want to look at as well, Home Depot. If there is one company with earnings this week that I think is significant, it could be that Home Depot stock. And that's one thing I'm waiting on tomorrow morning before the bell. You're going to get earnings coming out here.
And Tim, a positive reaction on Home Depot obviously can pull up a couple sectors there in the marketplace, but you also have a very important technical level right there between 239 and 240 here. If Home Depot can, on positive news breakout, maintain some strength, that could be a trigger. Obviously, we need to look at this as the week plays out.
And some other retails, Kohl's, Target, Tackle 25 stock has earnings, Lowe's, Macy's, Nordstrom's, Gap, but pretty much the market's got a light week in front of it. Matt, what do you expect? Last thoughts?
Price action.
Yeah, I'm going to stack theta. Yeah, there's opportunities on the reports. I saw some really good triggers here on the option and the stock report, both for bulls and bears, Matt. They're set up on both ways, and I love the analysis on the sectors. There's a lot of opportunity in this market, even though the market might not be one you buy the whole thing.
One reminder, a lot of people who use those reports use them not just for the step system, but they use it for debit spreads and credit spreads and
Sure.
other types of strategies that are more advanced in nature.
Yeah. And by way of announcement today, we always cut our podcast. We have a new one coming out here tomorrow or tonight, whenever we get it published. Usually on a Monday night is when we get those out.
It always gets published on Monday night for people to listen to on the computer on Tuesday.
The Trading Justice podcast, if you don't listen to it yet, follow it on iTunes or Spotify. We mentioned that, or any of those streaming services. And you can also just get straight to the website, Trading Justice. I love the one last week on the Expo. We've had a lot of good ones this year. Podcast's been a fun thing to do this year. There's no doubt about it. Go ahead.
I love the podcast, T. There's no doubt about that. I love doing it. I love being there. It's just something. It's a baby of mine, no doubt. But I'll tell you, that newsletter is so amazing every month. if you're not reading the Trading Justice newsletter, Coach Mark a lot of times, Coach Christian a lot of times, they do such a fantastic job. And we need to get them on the website. We need to get their nice little bios and, their Mark's handsome mugshot on that. Mark, you down with that? Should I get a picture of you watering your lawn with a cigarette?
I haven't sworn on air in a long time.
I was about to say
you
you're
have
hoping for a
about as
lot
much. You have about as much chance of getting a picture of me on any website as you do.
That means I can make up whatever picture I want and just put your name to it.
You can. I don't give a shit about that.
There you go. So
So
gave me
we
approval.
have an
Public
amazing-
approval.
we
Public
have an
approval.
amazing graphic designer that's really good with Photoshop. We could make Mark do anything.
I'm going to have Jessica create a caricature of Mark, and that's just going to be the picture we all
That's
use.
fine. That's fine.
Yeah.
Hey,
Yeah.
one other thing we have tonight that's a little abnormal in our scheduling is our Step System Mastermind group is tonight.
Okay.
So it's been a
Nice.
great. We have so many things going on these days that sometimes we have to double book shows. So normally that's on a Wednesday, but all of our Wednesdays were full. So for you pro members that have completed the Step System, this has been a stellar directional environment. Insane. Great time. This is kind of one of those must have to attend type sessions. So Step System tonight at 8:30 Eastern.
Dude, I love the Step System. We've gotten a lot of really great feedback this year
Very
since we
quickly.
released it. Yep.
Very quickly, for those of you who don't know how to access the Step System, if you're not getting it in the Tackle Today newsletter and whatnot, you just go to courses. If you want to watch the Step System, definitely watch it here. But then you can go to the mastermind group right there, and the link's on that page too. And let's just make sure and verify that that is the accurate link for our pro members so that they don't have to email in.
Yeah, for sure. One stock on the reports, by the way, that was grabbing my attention, Square. If you're a pro member, you know where it is. Go check this stock, the entry, the targets from the reports over the weekend. But I love this little reversal breakout potential here, Matt. Yeah.
Square can fly. Once it finds a trend, look at Square. It can fly. Now, obviously, it's been stuck in neutrality for a good, 16, 17 months now. But that's a good trigger on the day of the chart, no doubt about that.
And last thing here, guys, we'll be back tomorrow and each and every day when the markets are open. We're here at 12:30 Eastern. If you enjoyed our show, make sure you click that thumb up button and get the promo out there. And we'll see you guys tomorrow. Great job today, Matt. Great job, Cody. Great job, Mark. And we'll see you guys tomorrow, Tuesday.